Hello and welcome to your Friday crypto market update. I'm your host Michael John, and today we're closing out the trading week with a detailed, data-driven look at where the cryptocurrency market stands and how US investors are positioning themselves heading into the weekend. This report is designed for serious viewers, investors, traders, and long-term holders who want context, structure, and clarity rather than hype. In today's update, we will cover Bitcoin, Ethereum, Solana, XRP, Dogecoin, Shiba Inu, and key altcoins, while also examining institutional behavior, ETF flows, on-chain trends, and US macroeconomic influence. Let's begin with the broader market structure. As we reach the end of the week, the crypto market is showing a classic late-week structure: consolidation, reduced leverage, and selective accumulation. From a US perspective, market sentiment remains cautious, but constructive. This is not a panic market, and it is not a euphoric market. Instead, it reflects a mature phase where investors are waiting for confirmation rather than chasing price. Trading volume across major US platforms slowed slightly, which is typical ahead of weekends. However, what stands out is the absence of aggressive selling. That detail matters. On-chain data indicates that long-term holders are largely inactive, meaning they are not distributing assets into the market. Historically, this behavior aligns more closely with accumulation phases than with market tops. Another important factor is macro alignment. Equity markets remained relatively stable this week, bond yields showed limited movement, and expectations around future Federal Reserve decisions remained steady. When macro volatility is low, crypto markets often compress before expanding. With that context in mind, let's move to Bitcoin. Bitcoin remains the structural backbone of the entire crypto market. This week, Bitcoin traded within a controlled range, maintaining key support levels without showing signs of distribution. From a professional standpoint, this type of price behavior is often interpreted as strength, not weakness. One of the most important developments continues to be Bitcoin ETF behavior. While inflows were not explosive this week, they remained net positive. That tells us something critical. Institutional investors are not exiting. ETF participants typically operate with longer time horizons. Their continued presence suggests confidence in Bitcoin as a strategic asset rather than a speculative trade. On-chain metrics support this view. Coins held by long-term holders remain largely unmoved. Exchange balances continue to trend lower over time, indicating that Bitcoin is being withdrawn into cold storage rather than prepared for sale. Mining fundamentals also remain strong. Hash rate and network security metrics continue operating at historically high levels, reinforcing Bitcoin's resilience as a monetary network. From a macro perspective, Bitcoin remains sensitive to US interest rate expectations. However, the current environment, stable inflation data, and measured Federal Reserve communication has reduced downside pressure. Heading into the weekend, Bitcoin is expected to remain range-bound unless a macro catalyst emerges. Structurally, Bitcoin continues to behave like an asset under accumulation rather than distribution. Ethereum continues to demonstrate why it is viewed as the foundational layer of the digital asset economy. This week, Ethereum showed stability rather than volatility, and that is an important distinction. In markets, stability during uncertainty often signals underlying demand. Ethereum's Layer 2 ecosystem continues to expand rapidly. These networks are processing a growing share of total transactions, which reduces congestion and supports long-term scalability. For institutional observers, this matters more than short-term price action. Staking participation remains historically high. A large percentage of ETH's supply is locked, reducing available liquidity. Lower liquid supply tends to dampen downside volatility and can amplify upside moves when demand increases. From a US investment standpoint, Ethereum is increasingly viewed through a multi-use lens, as infrastructure, as yield-generating collateral, and as the settlement layer for tokenized assets. DeFi activity stabilized this week, with no major outflows. That suggests user confidence remains intact. For the weekend, Ethereum is expected to mirror Bitcoin's behavior. Any significant move in ETH will likely follow BTC rather than lead it. Solana continues to function as one of the market's key high-beta indicators. This week, Solana showed stronger relative movement than many large-cap altcoins. That tells us something important about risk appetite among US traders. Solana's strengths remain clear: high throughput, low transaction costs, and an active developer environment. These factors continue attracting both builders and speculative capital. On-chain usage metrics remained elevated, signaling genuine activity rather than artificial volume. This is critical when evaluating sustainability. From an institutional perspective, Solana is increasingly viewed as a complementary ecosystem rather than a direct competitor to Ethereum. That narrative shift has supported broader acceptance. However, it is important to note that Solana remains more volatile than Bitcoin and Ethereum. That volatility makes it attractive for short-term traders, but requires disciplined risk management. Heading into the weekend, Solana may experience sharper moves than the broader market, especially during low liquidity periods. XRP remains a unique case in the US crypto market due to its regulatory history and payment-focused narrative. This week was relatively quiet in terms of price movement, but XRP continues to draw attention because of its positioning relative to regulatory frameworks. Ripple's ongoing work with financial institutions keeps XRP relevant in discussions around cross-border settlement and liquidity management. Investor sentiment remains split. Some see XRP as undervalued relative to its use case, while others remain cautious due to lingering regulatory considerations. From a market structure perspective, XRP tends to move sharply only when new information emerges. In the absence of catalysts, it often trades sideways. For the weekend, XRP is expected to remain stable unless new developments arise. Dogecoin continues to act as a behavioral indicator within the US retail market. This week, Doge saw modest increases in search interest and engagement. While there were no major technical developments, community activity remained strong. Dogecoin's relevance comes less from fundamentals and more from sentiment. When retail risk appetite increases, Dogecoin often responds quickly. Merchant adoption continues gradually, reinforcing its role as a functional payment token rather than just a meme. Over weekends, Dogecoin often experiences heightened volatility due to increased retail participation. Shiba Inu remains one of the most actively discussed meme-based ecosystems. This week, activity within the Shiba Inu ecosystem remained steady, particularly around its Layer 2 network and community initiatives. Supply reduction mechanisms continue to be a focal point for holders, influencing sentiment more than price fundamentals. SHIB tends to move with broader meme coin sentiment rather than independently, especially during weekends when social activity increases. Several other major altcoins deserve attention as we close the week. Avalanche continues to attract enterprise-level interest due to its subnet architecture, which supports custom blockchain deployments. Cardano remains stable with high staking participation and a long-term, research-driven approach. Its investor base tends to be patient and fundamentals-focused. Chainlink continues gaining traction due to its role in real-world data integration and cross-chain communication. Institutional adoption remains its strongest driver. Polygon maintains its relevance in gaming and consumer-focused Web3 applications, supported by low fees and developer accessibility. These assets showed structural stability rather than speculative movement this week. As we head into the weekend, there are several important factors for US investors to keep in mind. First, weekend liquidity is lower, which can amplify price moves without significant volume. Second, Bitcoin remains the market anchor. As long as BTC holds its range, systemic risk remains low. Third, meme coins and high beta assets may experience increased activity as retail participation rises. Finally, any unexpected macro or regulatory news can shift sentiment quickly, even during low-volume periods. Overall, the market appears positioned for continuation rather than reversal. That concludes your Friday crypto market update. I'm Michael John, and this has been your structured, no-hype, data-focused breakdown of the crypto market as the week comes to a close. If you found this analysis valuable, be sure to like and share the video, and join us again on Sunday for our extended weekly crypto news report. Thank you for watching, and have a disciplined and informed weekend.